Good morning and welcome to the Moneycontrol Livestream. You are watching Markets with Santo and CJ. Well, it looks like we are going to end the May derivative series on the front foot. If you look at the XGX futures or the Nifty futures on the Singapore exchange, they're indicating a mildly positive start yet again for the fourth consecutive day. But the key question obviously remains whether this morning gains will sustain for the rest of the day.
You saw what happened the last 3-4 days,
exactly,
right?
for the past 3 days, we have failed. Bulls have failed to hold on to the ground, and bears have taken over. But I feel, Santo, maybe today could be a little different from the script that we have seen in the past 3 days, largely because today is the expiry of the May derivative series that will happen at 4:30, and usually ahead of the expiries, traders tend to cover their positions or square off their positions. And given that we have seen a largely short positions being added into the Nifty futures over the course of the past 1 month, more than 1 month, I feel that there is a possibility that after 2 o'clock, after 2:30, you might see some of the bigger traders squaring off their positions, and then maybe when the next series starts, then we will have to wait and see what sort of positions they take on the market. If you look at the FIS, Santo, at this point of time, they are holding about 33,000 contracts, net short contracts on the index, while retail investors are currently holding about 54,000 odd net long positions on the index. So given that the market has not really gone anywhere, you could have the retail investors trying to unwind their long positions. Whereas if the market actually trades higher till 2 p.m., you could have the shorts, which are the FIs at this point of time, also trying to cover off their short position. So either way, it could go any way, it could swing either way at this point in time. What will be important is the 16,000 level, the psychologically important support level that holds on. Yesterday we managed to hold on and we stayed above that level despite the sort of selling that came in towards the end of the session. But that will remain, be a key trigger as to we see short covering or long unwinding at the end of the session.
CJ, we're likely to see quite a few pullbacks because markets never fall in a straight line. But the key question is whether the pullbacks eventually lead to market going back even further down, which is the trend that we have been seeing since October. So I think one should be very wary of any pullback. This still continues to remain a sell on rise market, if you ask me. We have seen enough indications of that. The biggest indication was in March when you saw the index fall all the way to about 15,700 odd, and then climb all the way to 18,200. It come very close to making a new high, in fact. And now where are we? So this is a very, very treacherous market. Proceed with care. Don't get carried away by the pullback rallies. I think this is a time to be building a good portfolio of stocks for which there will be plenty of opportunities in the days ahead.
Well, talking of stocks, let's quickly dive into the stock list of stocks that we have, which we believe investors should be looking out for on the session today. Starting off with Santo.
Indus Towers. Now, a simple argument for the stock is that at this point, after the stock's steep fall over the last couple of months, it's come down to a point below the fair target that most brokerages have put for the stock. So, for instance, CLSA has a price target of 283, which it had trimmed from 340 after the fourth quarter earnings, which CLSA said were below market expectations. Citi is neutral on Indus Towers, but it also has a fair value of 230 rupees for the stock. If you look at the fundamental side of the story, now according to CLSA, the stock is quoting at almost a 75% discount compared to other global tar companies. If you look at all the parameters, operating profit margin, everything, last 3 years the compounded annual revenue growth has been close to about 22%. So the company is delivering well. It was expensive till some time back, but now I think it has come down to a point where investors probably could start looking at the stock again.
Santo, Indus Towers just does not excite me. The growth story there, probably 5 years ago, 10 years ago, it was probably one of those stocks that you would want to be in because you want to capitalize on the telecom sector growth. But at this point of time, the entire sector itself is changing, the dynamics are changing, and Indus Towers does not inspire me in terms of its growth story. Even if you look at it from a near-term perspective, the rising diesel cost for the company is going to weigh on its margins and its expenses going forward, because diesel is one of the input that it uses to run the towers that it owns. Apart from that, the tenancy ads or the amount of towers that it was adding in the March quarter also hit a multi-quarter low. So therefore, it goes to suggest that telecom companies themselves the demand from there is not coming in terms of new telecom towers, and that is a major concern, at least for the remaining coming quarters. Apart from that, the big trigger for the company will definitely be the 5G spectrum auctions, as well as the rollout of 5G services from telecoms. We have already had a delay in the auction, and we still do not have clarity whether the auction will happen this year or not. Plus, if you look at the commentary that is coming out from telecom companies, they are still wary of the higher prices of this auction, even though the government has slashed prices considerably. So for me, the growth outlook is just not good enough. It's just not exciting enough for me to be part of the stock.
Well, I granted there are near-term concerns, but both those points which you mentioned, high diesel prices, at some point they have to reverse. They just can't keep going up one way. So already the market seems to be pricing in the worst of it. Secondly, I would say the same for 5G rollout also. It might get a little delayed, but it's not off the table for now.
Well, Santo, talking of exciting stories, Coal India. I mean, you would not attach
I'm really
excitement
surprised
with
when
Coal
I
India,
saw
right?
that. Of all things, you're batting in favor of Coal India.
Yeah, but because it is banishing all the stereotypes against it. I mean, look at the numbers that have come in for the March quarter. Stellar Q4 earnings. It beat analyst expectations across the board, from operating profits to top line to net profit. Everywhere there was a beat on street expectations. The average realizations during the quarter have surged, largely led by the e-auction premiums, which are sitting at near all-time highs right now for the company. Inventory also, if you look at, if you talk about coal prices, which have been surging, and we know how that has impacted the power sector in the country, but inventory levels are also still quite low. That means the company, because it has to increase production going forward, the key for Coal India would be to start mining new coal mines out there in order to, supply the ever rising demand in this country. But if you look at it from an earnings perspective, people have talked about RIL, people have talked about Bharti Airtel, people have talked about ONGC being good earnings story for at least 2022. I feel Coal India is also among those great earning stories, at least for 2022, if not another 2 years. And therefore, if you really want to hide behind a good earning story, then Coal India is definitely the one stock that you should probably be looking at in a volatile market like this.
CJ, point taken, but this has been one of the best years, as in FY22 has been one of the best years for
bonanza year for Coal India.
And yet look at its earnings, it's almost the same as what it was in FY18, and
True.
even the increase in top line has not been all that much. So what really explains
But
it?
that is because it's recovering from a trough, right? It had seen major hits to its earnings in 2019, the slowdown from 2018, 19, 20, the pandemic year, and now from 2021, 2022 onwards, it's now starting to recover. So therefore, of course, the earnings came off and were quite at multi-year lows, and now they're trying to recover. So of course, it will seem like it's only gone back to 2018 levels, but you have to also be cognizant of the fact that where the starting point was quite low, and they were sitting at multi-quarter low in terms of net profits, in terms of sales. So this is a recovery phase of the company, and let's see. I don't think it has reached the peak phase yet. We will still see a lot of upside in the earnings, at least for the coming quarters.
CJ, I think this is clearly a sunset quarter. There are concerns, ESG concerns definitely that would hold back a lot of funds from buying into the stock in a big way. It's a good, it's a good
Santo,
dividend play, CJ. No doubt about that.
11% dividend yield.
It's a dividend yield, but then there is also your capital. There's your principal. If you look at the
that is what is happening. That is what the turnaround is, right? Usually, Coal India, you will lose the capital and you will just get the dividend. But this time around, for the past 1 year at least, you are now making money on the capital itself along with the dividend.
That's also, it's coming off a trough after having destroyed value for such a long time. Anyway, I'll be cautious on that.
And the next stock is what we live for. Santo.
Yes, of course, CJ. And the next story that we are on to, I'm bearish on that as well. Havells India, it's seen a good, the fourth quarter numbers were in line with analyst expectations or even slightly lower. The stock fell sharply, and now over the last couple of days, it's again been holding steady in a very volatile market. But the near-term outlook for the company continues to remain bearish. Margin pressures will continue to persist, and valuations at about close to 53 times forward earnings, according to Moneycontrol Pro, is on the higher side. So this is a story I would be cautious of and not really buy into the rebounds.
I'm surprised, Santo, you're cautious on a quality name like Havells India, but
Quality at a price.
quality at a price actually now at a reasonable price given the correction that the stock has undergone over the past 6 to 1 years. When you talk about, yes, near term, definitely the outlook is a little muddled by the fact that there is margin pressure, there is concerns about demand coming through because of the high inflationary environment that we are currently at. But the longer term story still remains quite intact, Santo. You have to give it. I mean, we are nowhere close to when you talk about white good penetration, when you talk about AC penetration compared to some of our, not only some of our developed market peers, but some of our developing peers as well. So in a country where urbanization is happening at such a rapid pace, you're seeing vast swaths of population moving to urban centers from rural centers. White good penetration is going to rise going forward, and therefore Havells is a good bet on that story from a 10 to 15 year point of view.
10 to 15 years
yeah,
is a very long time.
That is why I said I was surprised that you were talking, you were so bearish on a quality bet like this, which has also undergone, valuation compression as well. Yes, 2 years ago, maybe Havells would have deterred everybody else because the valuation was so expensive. Although agreed that valuations were expensive because the growth was so good and there was a premium for that growth. But now, given that growth outlook from a long-term perspective has not really changed at all, and valuations have also come down, I think this could be a good bet to play on that valuation going towards the mean, given that it has been so compressed.
But one would wait for a better entry point. See, there is already severe pressure in the white goods segment as well. The margins there are under really attack. You have even big players like Voltas losing market share. Now Lloyds, Havells had acquired Lloyds, and Lloyds did contribute.
Paid off well,
but there are margin pressures there too, very clearly. So I think you could see the stock struggle for a while, and one should wait for a better entry point.
Well, when the stock is struggling, that is when you should think about accumulating, right? Yeah. So any dip on the stock will definitely be a buy. Talking about one stock that definitely is a buy at this point of time is Galaxy Surfactants, another stock that has taken a beating in the largely specialty chemical space over the past 4 to 5 months. Yes, near-term concerns were there in terms of margins and whatnot. But if you look at the management's commentary recently to Edelweiss Securities at a conference, they were quite bullish about the demand that they are seeing, the demand pipeline that they are seeing from user industries like textiles and others. They are very confident that they will be able to compound their sales at least 13 to 15% on an annual basis. Apart from that, if you look at some of the commentary that has come in from Edelweiss itself, they are expecting that the return on capital employed for the stock would remain in excess of 25%, which is very good in a market like India. Apart from that, Edelweiss itself is expecting the EPS or earnings per share of the company to compound at 13% on an annualized basis over the next 2 to 3 years. So therefore, this is a very steady earnings growth along with a very good top line outlook, and that too available at reasonable valuation, given that the stock has undergone decent amount of correction in the past 3 to 4 months. So overall, a good buy on dip story at this point of time.
Well, I don't quite agree with the reasonable valuations part, because the stock may have fallen from the peak, but that still doesn't make it really cheap, because it's still going at about 6 times book. And agreed that it's in kind of a niche segment right now, and its major customers, which are FMCG companies right now, there is strong demand there. But also remember that FMCG companies themselves are undergoing a lot of stress at this point, right? So they would also try to lower their sourcing costs, and this is where I think some bit of pain would be felt by Galaxy Surfactants also.
Santo, I agree that FMCG definitely there could be some pressure there, but this is another, as Havells is, this is another longer term story, and the longer term story here is good, and therefore if you want to buy quality stocks for your portfolio,
well, the market has opened and Nifty is up about 95 points, 16,100.
But I wonder if this is a false dawn, Santo.
We have seen a lot of false dawns this week so far, and some bit of skepticism, so it's quite natural.
The mid cap space is also doing quite well. The Nifty mid cap 100 is up about 0.6%.
And you can see that in the market breadth, about 1200 stocks are up, while 500 stocks are below their previous close. Nifty Bank is up about 1%, good strength there.
That is a good strength. I hope, bank, a lot of analysts are expecting that banks could be the next leader if there is a pullback in the market. If you look at some of the mid cap counters that are doing well today, Sanofi India is up about 2.5%, Vodafone Idea, Tata Elxsi, V-Guard and Dixon Technologies are some of the other stocks that are rising are up about 1.5 to 2.5%. in trade at this point of time for the mid-cap space. While on the laggards, we have Fortis, Whirlpool, Dhani Services and City Union Bank that are leading the losses for the mid-cap space.
Strong rebound in Tata Steel as well. The stock is up about 1%. ICICI Bank is up in early trade. Apollo Hospitals under pressure, down by close to about 4%. And now coming back to the last stock on our watch list, stocks rather, Asian Paints and Berger Paints. Now, paint stocks in general had taken a beating yesterday. That was after Grasim Industries said that it would be investing about 10,000 crore in the paint business in this year. So, competitive intensity.
Some statement of intent. Huh?
Yes, and competitive intensity is something that is now beginning to worry investors in paint stocks. Already market is questioning high valuations. These stocks took a beating yesterday, and from the look of it, CJ, I think they could be in for a slide in the short term.
Well, Santo, I don't know about much about Berger Paints. Probably, I mean, this is one stock that could be hit the most from aggressiveness, because if you look at what Mr. Kumar Mangalam Billa also had to say, they wanted to remain a strong number 2, and I guess when a new competitor comes in, it's the number 2, number 3 and number 4 which will definitely feel the pinch more than the number 1. The number 1 here is Asian Paints, and I am very confident, as I mentioned yesterday, that Asian Paints will be able to see off this new competitive pressure that is emerging in the paint industry. Its margins are so dominant that it can take a few percentage points of hit to maintain its market share and probably price its competition out of the market itself. So while Grasim may be able to win a little bit of market share in over the coming years, but I do not see it matching or even being rivaling Asian Paints in terms of the dominance for the industry.
Well, CJ, this is going to be a multi-year story. It's very unlikely that a player can just walk in and knock the
I feel it's,
number 1.
It's a non-event for Asian Paints. I mean,
I wouldn't say no. I wouldn't agree there exactly. See, CJ, so far the story was that margins were quite juicy and competition was low. Now we have, the entire attention is on Grasim Industries, but we have forgotten one thing, that the JSW Group too is getting into paints in a big way. So there are bigger players getting out there because the home sector, the realty sector has been doing well. You're attracting a lot of players into the paint segment. So competition is rising, okay, which means that at some point there will be a hit to margins. Now Asian Paints is in a position to take a bit of hit to its margins, but it clearly means that it will have to compromise somewhere. And the whole story right now was that good, strong, steady growth, which now comes under question because you have both competition as well as pressure on margins. So this, I think, the cautious outlook on some of these richly valued stocks like Asian Paints and Berger Paints, I think that could result in these stocks losing ground in the coming days.
Well, that said, apart from stocks and the market, the World Economic Forum is also ongoing at Davos at this point of time. It's for the first time that this forum has been held in spring instead of the usual winter schedule, and Moneycontrol is on the ground at ground zero, providing you all the live updates and coverage. Following is a little montage of the highlights from yesterday's session. Please have a look and also stay tuned to Moneycontrol for rest of your World Economic Forum updates for the time being.
And well, with that, it's a wrap on this edition of Markets with Santo and CJ. Thank you for watching. I hope you enjoyed watching it, and do share your feedback in the comment section below.
And do follow us on the social media links at the bottom of your screen, and stay tuned to moneycontrol.com and the Moneycontrol app for rest of your financial coverage.